Financial security for you and your family is without a doubt a huge motivating factor when it comes to making money and without a doubt when it comes to investing. But with so many different investment vehicles like stocks, bonds, and even ETFs, it can be hard to know which investing strategy is the perfect tool to set you and your family up forever. Now in this video, we're going to break down why I personally think investing into an ETF like the SCHD Schwab US Dividend ETF is one of the best choices of all. And on top of that, we're going to go through the exact math and show you how just $50,000 invested into this ETF could change you and your family's life financially in the future forever. Now stick around because we have a lot to go through. Right after you, please drop a like on this video and subscribe for more future content like this. Now first off, let's take a step back. Why do I personally think that SCHD is the perfect ETF or investment vehicle for that matter to get you and your family to financial freedom long term? Well, to give a quick overview, things like the cheap expense ratio, the fund's overall objective, the ETF's diversified holdings, how much the ETF has appreciated in price over time, the dividend growth, and of course, the starting dividend yield. But now let's take a minute and dive deep into this ETF and learn everything that it has to offer. SCHD, also known as the Schwab US Dividend Equity ETF, is a popular exchange-traded fund that aims to provide investors with an exposure to high-quality US dividend-paying stocks. The fund is managed by Charles Schwab Investment Management and seeks to track the performance of the Dow Jones US Dividend 100 Index. The Dow Jones US Dividend 100 Index is comprised of around 100 companies that have a history of consistently paying dividends, a track record of strong financial performance, and a history of raising dividends over time. Now, the ETF has gained some serious popularity over the past years, and this is largely due to things like the dividend focus. The fund focuses on dividend-paying stocks, which can be appealing to investors that are seeking income-generating assets. Also, the fund is very cost effective. The management fee is low, the fund is well diversified, and the dividend growth is insane, but we're going to go through all that and more in a second here. Now, one of the main reasons I would choose to hold onto this ETF is because of the fund strategy, how it chooses its holdings. And of course, with my personal risk tolerance, the diversification would definitely help me sleep well at night. The breakdown is as follows. Industrials 17%, healthcare 15%, financials 14%, technology 13%, consumer defensive 13%, consumer cyclical 9%, energy 8%, communication 4%, basic material 1%, and utilities under 1%. Now SCHD has a very strong list of top 10 holdings if you were to ask me. We have companies like Broadcom, Pepsi, Cisco, Merck, the Home Depot, Texas Instrument, Coca-Cola, Chevron, Verizon, and Pfizer. Again, the basic strategy of SCHD is to pick companies with a strong financial background and companies that pay and grow dividends over time. Now, speaking of SCHD's dividend, the current dividend yield is around 3.49%. And keep in mind, SCHD is going to be paying another dividend pretty soon here, so the future trailing 12-month payout percentage is going to depend on what the next few dividends, of course, are. Now, SCHD is currently trading at $73.62, which makes the ETF down 2.4% year to date and somewhere close to the middle range of the 52-week range. But if we zoom out a little bit, this ETF is up 182.9% in the last 10 years or so, and that is not even including dividends. So now that we are able to learn a little bit more about SCHD and what the ETF really has to offer, for an ETF to be able to take care of me and my family and change our lives in the future financially speaking, this ETF is going to need to have a decent starting dividend yield, which SCHD definitely has. By a decent starting dividend yield, this ETF is going to be giving off a nice amount of cash flow, and especially after dividends are reinvested, which you're going to see here in a second, the amount of dividends over time after they snowball are going to be able to take care of things like bills, or even take care of absolutely everything for you and your family later on in the future. Now, this ETF also does have a very, very substantial dividend growth rate, which means in theory, you and your family are going to be receiving more and more paid out in dividends as time goes on into the future. So with that, along with everything else that we talked about earlier, I definitely do think this ETF has what it takes to really make an impact on a long-term investor and their family's future substantially. So now that we went over all that, let's go back and talk about the title of the video. I said that just $50,000 invested into the SCHD ETF could change the future for an investor and their future family, long term into the future. Now, if we go through the dividend calculator and type in $50,000 as starting principal, a 3.49% initial annual dividend yield, a 10% annual dividend amount increase, which is somewhere in the range of what SCHD has given off. Again, this can of course go up or down depending on what happens in the future. This is all just in theory, just to give us all an idea of what things could look like. The expected annual share price appreciation, let's go with 10%, 30 years invested, an annual contribution rate of $1,200, which means in theory this investor after the $50,000 would also invest around $100 per month more into SCHD, which relatively speaking is not that much. We're going to have dividends reinvested turned down, of course, the quarterly distribution rate. Let's see what we get. So the numbers are in, and after the first year, this investor would receive around $1,700 per year in dividends, and the total principal would be just the initial principal at $50,000. After the reinvesting of dividends and of course the principal increase along with the annual contribution, we'd be at $57,000 year number 2 with over $2,000 per year in dividends. Year number 3, $66K and $2,300 per year in dividends. So right now maybe you're saying, well, these numbers are honestly pretty small, and there's absolutely no way that just $50,000 into this ETF with a small contribution on top of that could change the financial future for me and my family. But if we scroll down a little bit by year number 6 already, the principal of the portfolio would already be at almost $100,000 with $3,500 a year in dividends. And again, just from an initial $50,000 and $1,200 per year contributed. By year number 10, 10 years down the road, $168,000 and $6,000 more or less annually paid in dividends. Now keep in mind this process would be much better off for an investor that's, let's say 20, 25, 30 years old, because again, the power of compounding needs time on its side to really start to curl up. But by year number 15, we're at $318,000 and $11,200 per year in dividends. By year number 20, $600,000 more or less in principal and $21,000 per year in dividends. Now from year number 20 to 25 to 30, the numbers are starting to get much bigger. And as you can see on the chart, that's how the power of compounding works. When the numbers get bigger and they're reinvested, and if you let time do its thing, the numbers are going to consistently get bigger and bigger the further you let the portfolio bake. So by year number 25, this portfolio is now at $1.1 million with $39,000 per year in dividends. Now every year after year 25, the dividends get bigger and the portfolio is growing substantially now. $1.249 million worth of portfolio and $44,000 per year in dividends. By year number 27, $1.4 million and almost $50K in dividends per year. By year number 28, $1.6 million and $56,000 in dividends per year. 29, $1.8 and $63,000. And by year number 30, $2 million plus and $72,000 every single year paid out in dividends. Now, of course, the reality is that a lot of different metrics can change, so take this all with a grain of salt. This is, of course, just the math from the numbers that we're going with. But realistically speaking, it just goes to show that a relatively small amount of money invested into something high quality, like the SCHD ETF, definitely has the potential to make millions upon millions long down the road and to pay over $72,000 every single year in dividends. Now, what's crazy is that if we were to extend out the timeline, let's say that you started this portfolio today and then you gave the portfolio to your kids just to see how the math would work later down the line. By year number 31, we're at $2.3 million and $81,000 per year in dividends. Year number 32, $2.6 million and $92,000 per year in dividends. Now, from this point on, the numbers are really starting to get big. Take things into consideration like a yearly salary for someone. And looking at the annual dividends, it's really starting to get up there. By year number 40, if this portfolio was just left alone to keep reinvesting and to be a golden goose egg for your family later on, $7 million 40 years in with over $246,000 per year in dividends. And by year number 50, all the way down, $23 million, $672,000 and $837,000 per year in dividends. But I want to hear from you guys down below when it comes to investing into a long-term dividend growth ETF. If you could only choose one to invest into forever, which ETF would it be and why? If you enjoyed this video, make sure to please drop a like down below and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.